Welcome back to the Daily Gold Podcast. Today I'm speaking with Dave Morgan. He's editor and publisher of the Morgan Report at silver-investor.com. Dave, let me get right to it because I know you're on the road and I'm very appreciative that you're able to do this interview. So my first question is, at what point do you think these events in Europe become near-term bullish for gold and silver rather than bearish, or have we already hit that point?
I think we've already hit that point. I know that gold and silver aren't responding up and away, which you might expect them to. Having expectations of these markets is difficult, especially after these big run-ups that we had in gold, and particularly in silver, a little over a year ago. I mean, silver moved from roughly 26 to 48 in a few months' time, and went parabolic for a short time. And now we've been in this consolidation for 14 months or so. The fundamentals have never been stronger. What's going on in Europe would obviously state that you would think silver, particularly gold in that case, would be moving higher. It's not. Fundamentally, the case is strong. Secondly, gold is off of its support area, which is roughly the $1,550 range. It's not a lot above that, but it keeps testing that and bouncing off of it. So I think the low is in, and you also have to think like a banker would think if they wanted to go long gold or reposition themselves. If these markets are quiet and they're buying in slowly to not move the market up very much, that might have some influence. In other words, the market is what it is, and even though the fundamentals are better than ever, there's not a lot of interest. And a lot of people, as you know, find that the U.S. dollar to be a safe haven. I find that to be very temporary, very short-sighted thinking. Nonetheless, it exists. So as this situation in Europe worsens, and I think it will, you'll see more of that safe dollar status move into the metal. So I really think that the bottom is in for gold and silver probably by the end of this month, and we're going to see higher prices shortly thereafter.
Dave, I want to just follow up on the fact that you're saying that this is the bottom. Because I know you've watched these markets for decades, really, and you have much more experience in that regard than many of today's analysts. So I think a lot of people are so used to seeing just V-type bottoms in these metals. So the fact that, I agree with you. Gold and silver are holding support. I personally think they're going to gradually move higher. But, should we not be concerned about the fact that we haven't seen a V bottom in these markets?
Always. To be very factual, I've been extremely accurate on the tops. I got the $8.40 top, the $21 top, and the $48 top, and I got all of them almost perfectly. Bottoms, I have not been as good at. The bottom in 2008, I called the top at 21. I called the bottom at 12.50. It eventually got below 9 temporarily. The spot market, the retail market actually stayed around the 13.50 level. So, I don't want to, parse words or be untruthful. The bottom that I called held for about 3 weeks, and then it collapsed and there was a lower low. That could happen again here. What I am almost certain about is that the mining shares have bottomed. Whether the metals have bottomed here or not remains to be determined. I don't have enough data in front of me, and they can only know a bottom or a top after the fact, not before the fact. But I know we're low enough in here that you could certainly start accumulating. And again, that's sort of what I was referencing in your first question, is that I think that the smart money might not be going fully in here in the European markets for gold and silver, but they are definitely positioning themselves in those markets. I do think that the silver market's probably going to bottom by the end of June. That's historically a seasonality for silver to bottom. It also goes along with the sentiment that's out there, so I'm pretty confident that they're in. And if I misstated something earlier, I just like to restate it. I see a gradual uptrend from the low. If it's the end of June or not remains again to be determined, but I don't see a rocket ship back up. I think it's going to take some time to build a base, and it will come back up. I'm looking really optimistically for like $40 silver by the end of the year, and probably $1,900 gold, maybe a bit higher. So I think gold will reestablish near its nominal high, which is around the $1,900 level from, say, September through the end of December this year. And silver will not, I don't think, get back to the $48 level this year. I think it could get back into the high 30s or possibly 40 by the end of the year.
Okay, so let's move into some of the fundamentals for silver. We've been hearing a lot about growing Chinese demand for gold via imports from Hong Kong. What's going on right now with Chinese demand for silver?
It's a very fascinating story. My next trip after this one will be moving to Hong Kong, and I'll be speaking on Standard Chartered Banks conference, and I'm going to focus a great deal on the Chinese demand for silver. If you go back over the last decade, the export of silver from China was 100 million ounces on an annual basis. Today, they import 100 million ounces on an annual basis. So that's a 200 million ounce swing over a decade. And they have increased their mining supply of silver substantially, and they are responsible for almost all of the solar panel manufacturing that goes on in the world. And they continue to increase their investment demand for silver as well as gold. And coming back to gold, I mean, the increase in demand for gold as basically a monetary safe haven. I mean, gold doesn't have a lot of industrial uses. Was 600% in the first quarter, and I like to point out that that is what's reported. In other words, I and several other analysts pointed out some time ago, going back just a couple of years, that the amount of gold that China is purportedly moving into the country probably is understated by a great deal. And later on, sometime after that, it was noted that China had actually imported a substantial larger amount than they were putting in for the public view. And I think that's the case again here. I also think that they're very quiet about their silver usage. When I was in China on one of my major trips to Beijing, I met with some of the bankers and also met with some of the mining bureau. And they're very interested in the silver market, but they're very quiet. They don't make a big fuss about it, but they are interested in it. They know its industrial applications. They didn't get into the monetary aspect with me very much, but I pressed them a bit on it. And they obviously knew what I was talking about. The Chinese are the last to go off a silver standard. They're really quite aware that silver at one time was very popular as money in China. Not that that holds any weight currently, but what does hold weight currently is that there are many ways to invest in silver for the general population if they have the extra funds to do so in China. So there's investment demand, there's industrial demand, and it's, I believe, going to continue. Not that China doesn't have a lot of problems along with the rest of the world on this misallocation of capital doing a Keynesian approach to economics where the government's in charge and they stimulate the economy by keeping interest rates low and flooding the country with money. They've got the same Keynesian disease that the rest of the Anglo-American empire has. But nonetheless, fundamentally, that doesn't change the picture for silver other than on maybe a very short-term basis.
Now, in terms of industrial demand, is there a strong fundamental case for owning silver in the near term, like over the next 9 to 12 months or so? In other words, can industrial demand support silver above $30 an ounce?
Great question, and in all honesty, I would say probably not. The reason I say that is, you're asking my strong opinion. I study this market very hard, and industrial demand, as strong as it is, and as much as it has grown over the last decade, probably is going to fall off somewhat for the remainder of this year, probably over the time frame you're talking about, 9 to 12 months. This deflationary scare that we are in right now with all that's going on in the global economic system, and the lessening of solar production. The solar panels that are being produced, we're doubling every year for the last couple of years, but that's starting to fall off substantially in the European zone because Europe's basically out of money as well. So they were mostly government subsidies that were used to get all these solar panels into various government buildings and that type of thing, and that sponsorship's gone away. The money's just not there. So the projection was to be about 140 million ounces of silver used for solar panels on an annual basis starting in about 2014. That's been reduced to about 100 million ounces. So that's a 40% whack. So that's a substantial amount of silver that's coming out of the industrial equation. But really, let's continue on, and maybe that's your next question. But it's really investment demand that's the driver for the price of silver, and obviously, investment demand is also the driver for gold. So we probably should look into that as well.
Right. So yeah, concluding. So then, what would you say are the compelling reasons to own silver and silver stocks over the next 9 to 12 months? Is it the fact that we're buying at a major low here? Is it the potential new macroeconomic policy that could come about, or is it something else? I mean, could you decipher that for us?
Sure. Well, I'm in agreement with you, and I'll just add on to it. One, technically and historically, we're at a pretty good low here, so it may not be the exact low. So that's one reason. Secondly, if you believe what I believe, and that is that the economic conundrum that we're in is going to be solved in the manner that they always have in the past, which means central banks are continuing to flood the market with cheap printing of money, then silver has been proven to be the best asset class to be in. There's no doubt that if you have an inflationary depression, not a debt liquidating depression where dollars become more valuable than gold instead of gold become more valuable than dollars on a ratio basis, if that is the case, and I'm correct, then silver actually outperforms gold. And that's history speaking. That's not my opinion. That's a fact. Now the only problem is there a chance of the dollar being the best asset to own and not a 5,000 years of history of owning gold and silver? Possibly. I wouldn't rule it out entirely, but I find it highly unlikely. But it is possible. But in the case that I'm stating, where the governments of the world, or the central banks of the world more accurately, decide to continue to try to push money into the system and debase the currencies, whether it be a euro, whether it be a dollar, whether it be an Australian dollar, Canadian dollar, or what have you, matters little. Silver will actually be the place to be, because as these currencies debase further, the general population will wake up. And I don't mean just the United States. I mean China, South America, India, Australia. I mean the globe. And this is a global problem, and it's a global basis that will move it in the silver market. And there's a lot more people that are awake and aware this time than there was last time in the late 1970s, early 1980, where the price ran from basically the $6 level at the beginning of 1979 to the $50 level by January 21st, 1980. So in a 13-month time frame, you've had like an 8-fold increase in the price of silver. I think that's possible again. Now, I'm not saying that's going to happen in 2013, but what I'm suggesting is that the biggest move is actually ahead of us, believe it or not. And people that look back, say, from 2015 or 16, that, find us in the archives on your website and listen to it, say, oh my goodness, I was afraid to buy silver under 30. I knew that it was at 5 at one time. It just seemed so high at 30. When, it hits 300 or something, and I'm not saying it will, but it certainly could. Then they're going to look back and say, geez, I really wish I would have listened to this interview or whatever. So.
Well, as we close, Dave, that comment there, it brings a smile to my face, because it reminds me, I think we did an interview in 2009. I think silver was trading at around $15 or maybe a little bit. I think it was probably lower, maybe closer to 10. And you said $25 was the key level that, once it went over that, the market would get hot. And, it went right up to 50. So, I'm just thinking about that. But as we close, could you just tell our listeners about the Morgan Report?
You bet. I'm going to actually take the time to talk about a little bit more than that. First of all the free stuff that we give out. One is I'm on a YouTube channel, which I do a lot of videos. It's a really good, quick way to kind of get an overview of the silver market and the current ideas I have in the economy and the silver market. That's called Silver Guru, SALVERGURU, on YouTube. I have a Twitter feed, that's Silver Guru 22. And then as far as the website's concerned, just go to themorganreport.com. That's, again, one word, themorganreport.com. And sign up for our free information if you're so inclined. We have 3 levels of service, beginner, intermediate, and advanced. And there are Camtasia videos. If you don't know what Camtasia is, it's just it's a video capture program that shows you whatever you're looking at on a desktop. So I'm actually speaking to the viewer, and I'm showing the inside of the Morgan Report. So when you become a member, it greets you with your name, and it by video shows you what you would see on the interior of the site if you were a member. So you get a pretty good idea of what you get in the basic service, what you get in the basic plus look over my shoulder service, and what you get in the premium service. So that's it. I thank you for your time. Great questions. Hopefully this will be beneficial to your listeners.
Well, Dave, thanks so much. I appreciate your time, because I know you're on the road. And, again, I really appreciate it. Your great insight, as always, and safe travels to you.
Thanks so much.